All right, we're good to go. Good morning, and there is a late start to the planner session. Short story. Went to sleep reading about a some sort of a huge weather bomb that's heading right for our area next Tuesday. Somehow this is already projected. Ugly map that I saw, and I wondered, great, is our power going to go out? And that is a funny answer that I got overnight. So it is back though. This is just checking all my systems, and I think we're all good to go. So interesting overnight. I didn't know if this was going to be some sort of reaction to the Trump indictment, but we gapped back down and stopped, and all we did was retrace. I don't think the market cares about that. I mean, I would have been shocked if it had, but we gapped down and basically immediately gave back what was unlawfully attained, and it's not unusual, it happens. But the afternoon rally yesterday just kept ticking away after the cash session closed. And that's interesting because it started very optimistically. Recall that the low, yesterday afternoon's low, developed right at one of the outstanding Fibonacci. I mean, it had been tested as resistance, not as support. One of the Fibonacci projections of the Tuesday-Wednesday gap. That is, this is the proxy for the gap between Tuesday's close and Wednesday's open, cash session open. This is the proxy for that gap at 40.18, which is going to be in play if anything about this starts giving way. But yesterday's high was actually, there was a cluster of objectives in here, 40.58 to got up to 40.60. And this is Wednesday, sorry, not yesterday. 40.60 being the target of the day. We just gapped up from. Thursday's dip didn't get down to 40.60, didn't get down to 40.58, which was, I mean, it did touch a structural level, Tuesday's lower or Wednesday's lower prior high. But that was it. And that is, I mean, it could have been only more optimistic. I mean, how do you drop from 88 to 61 optimistically? By barely touching, if at all, the lower prior high. It was touched, but then took right back off. And one of the themes that we've been looking at in the market is how it's conditioning us to buy dips. I mean, we really had just started observing it Wednesday, with Wednesday's gap up. Friday, there'd been a very bullish opening thrust setup where the opening timing windows tried to reverse down and failed. That was already rewarded Friday afternoon, but then Monday and Tuesday, while all that selling pressure developed throughout the day and maintained control, it was exclusively in positive territory. And then the next day, even through the last morning timing window, had held relevant support, probed lower anyway, rewarding the market overnight for the buying the dip. And then, of course, extending higher into yesterday's open. So all of that and yesterday's open really got things going. And apparently, I think we're a little bit faster, or a little bit further along, developing faster in this setup, again, that I only just started talking about. So there's whatever that post-close extension is. I mean, it's very minuscule. Sometimes the biggest things come in the smallest packages. And this is a very granular look at an otherwise irrelevant window, the overnight. But not only does it recover, first it tags up, it neutralizes that excess. So we're back to neutral. We haven't really created a vacuum. That is back to a close, back to the cash session close. This is all irrelevant after that. And then we extend higher to fresh highs. And that's great. But look what happens next. This is the Globex opens range. The Globex opens range, the first hour, this is pre-China or pre-Asia, pre-Europe. It's a 4-point range, 40.78, 40.82. Come back down into it. It's exactly as influential as you would expect it to be normally, acting as support. But what happened in the interim? We probed a fresh high. Probed a fresh high, probed above the prior session's high, and not arbitrarily just ranging sideways and then probing a prior high, but in a multi-session trend. So in other words, at least 2 consecutive higher closes. And there were just 2 consecutive higher closes, Wednesday and Thursday. That was without the overnight. Before probing overnight the prior session's high. And what does the prior session's high do when it's after being probed? It reverses back down under that prior session's high to the Globex first hour range. This is called a Globex flip. Now, this is called a Globex flip if this were to develop during the first 15 minutes. That is 9:30 to 9:45. Between 9:30 and 9:45, if the Globex opens range is tested like this, if this is what it looks like, post-open, and bounces out of here through 9:45, that, especially on a Friday, that becomes very bullish. That is from a position of strength, from having tried to probe higher. That's a pause that tests very critical support. Post-open, the intraday crowd tries to retake control and then fails. And on any other day, that's just going to tell us the morning's bias. And on any other day when it tells us the morning's bias, it's going to tend to trend in that direction or be biased in that direction. It can predict a bunch of other setups that might start developing, so long as they start forming, of course. So that's kind of interesting. What's really interesting is when the Globex flip refers not to this, but to, let's get a little room here, but to this, where from above, from having probed the prior session, the first 15 minutes at 9:45 lapses under at 9:45 rather than having held a test like this. At 9:45, we are back under that Globex opens range. That can be very predictive for the balance of the day. If it's just predictive of the morning, it can be very obvious in the morning that we've flipped. That's on a Friday. And that's a function of another input. Of course, this being Friday, or any day ahead of the weekend, Friday factors. And Friday factors is just different behaviors, or actually more enhanced behaviors, because there's 2 days of illiquidity coming. And that is, there you go. That's, for instance, the bias. The morning's bias tends to persist through the noon hour on Fridays. On any other day, as you can see from the timeline under the chart, this doesn't go all the way, but you can see all the way down here, the timeline under the chart, the morning's bias is 10:15 to 11:30. Then there's the noon hour before the afternoon bias window. Well, on Fridays, if the morning triggers a bias, that bias tends to persist all morning and through the noon hour until the handoff to the afternoon. And if you're new here, here's the bias. It's in the blog. It's published. It's available from patterns that have formed through the prior close. And it's published at 5 o'clock Eastern. But this is the Friday morning bias. And it really just states this. And it is based on patterns, again, through yesterday's close. That the AM bias, and here's where we'll put what it developed into at 10:15. But there's a 60-minute window where we have a high degree of confidence every morning what the market intends to do. There's several different permutations. There's the more bias rules. Link gives a lot of different assessments, the algorithm basically, the rule set. At 10:30, there's no more bias influence, or no more bias formation. We know what the market's doing. And I talk it through, of course, in real time as it's forming. It becomes second nature to you. But basically, that's these lines, the green and red lines. The internal green and red lines are the bias signals. The external green and red lines are their targets. And so a bias up will trigger above 4088, targeting 4101. 4088, targeting 4101. You can dance around that all at once, but it has to be maintained or not, maintained or rejected at 10:15. So at 10:15, wherever the spinning Coke bottle stops, if it's above 4088, that puts into play 4101. It also then requires 4088 to define that window's low. The closer we are to 4088, the more attractive the long to get to 4101. If we're back under 4088, having tested it, back under 4088 is a reverse bias. And as you can see, when you're in the blog, if you hold your cursor over an underlined word, there's a helpful tool tip that sticks up. Very helpful most of the time. Right now it's annoying. But at 10:15, if rather than exceeding 4088, as is being threatened repeatedly overnight, if between 9:30 and 9:45, 4088 is touched, it has to be touched again post-open, not just overnight. But at 10:15, it did not hold. That's a reverse bias, and that puts into play a test of the opposite bias signal. So if the bias up signal were tested after 9:30, but as of 9:45, it's not being recovered, also not being overlapped. This is overlapped. That's not a decision. If this is what it looks like at 10:15, that's not a signal. But if we're dipping away from it, that would put into play an offsetting test of the 4074 bias down signal. Pretty attractive. Here's yesterday morning's bias signals. There's these are pretty narrow spreads between the signals, by the way, in this environment. But anyway, if that happens, then also the morning and on Fridays through the noon hour should be contained between the bias signals. So, but with an objective that we can trade against. But that's at 10:15. At 9:45, though, giving us an early heads up, if we've actually already gone ahead and rejected enough of the overnight range, gotten back to and through the first hour's low, that opens the door to a lot of downside. If the first 15 minutes tries and fails, those sellers are trapped, they're isolated, they become rocket fuel to power the rally extending higher. So that's what we're going to be focused on. Assuming that we're opening anywhere in this range. Meanwhile, just to point out that the rally, there's nothing about this rally that is surprising that we're here, that we've gotten there. The timing a little overly optimistic or a little extremely optimistic. The extreme, so long as it's maintained, is fine. But it does risk getting overly optimistic, which it would be basically the catalyst to the setups that I just described that would point down for the morning. But otherwise, so long as we come out of the open, not even threatening yesterday's low, then we are still headed for the upper band of this channel, which, by the way, even without that channel, we're still headed for the last touch of downtrending resistance off February's high. And by the way, there is no bearish reason for that. Sellers already refueled. Sellers already refueled at downtrending resistance, the proxy for that touch. Already responded to it. Back to the parallel uptrending support. There is no bearish reason for the market to have retraced this trend line intersection. That's 40.45. The FOMC last Wednesday's reaction high is 40.74. That doesn't mean it's a straight shot higher from there, but it's positions of strength that can help absorb against corrective dips. It's just more confirmation we're heading back to the highs where there is unfinished business above. Just more confirmation if we actually touch the 4120 area. But if we get a dip going, remember that proxy gap, 4018? This is the objective, the 4018 to 40, its counterpart 4028. That's the objective if sellers get going. A little bit of interference here at lower prior highs around 4046, 45. That could end that. But otherwise, 4018, 4028 would be in play. All right, so any questions about any of that, please ask. Let's real quickly go around the horn here. Other markets, and then that'll be it. We retested the high. That was the objective of this rally, was to retest the high. The high was retested in the euro. Played out really quickly after the gap down. Was rejected on Monday. Didn't have to, so that may have been overly optimistic, but the rally resumed, or is maintained, so long as this expanding cone is maintained. That gives it a pullback limit around 109.10, which is being honored. Tested, but honored. I don't see momentum reversing down until 108.75 breaks. But there's not much reason to maintain it if 109.10 can't hold. I hope I didn't speak too soon. I think everything came back. Let me go digging here. All right, here's gold. So gold got up to resistance. Remember, gold was forming a head and shoulders, and it would have been fully formed had the right shoulder been lower than the left shoulder to this degree, because from left shoulder to right neckline, that was a 61.8 retrace to 1975. That would have qualified. That would still be symmetrical. It went on to actually become symmetrical, testing pretty much the 1984 left shoulder. There's a whole array of different options for that. But that is now a fully formed head and shoulders. Head and shoulders don't always reverse down. And even when they do, the reversal is temporary most of the time. So under 1960, we'll look for a pullback underway, temporary pullback, but eventually planning to resume the rally. Otherwise, this becomes a continuation pattern on a close above 1984. It's April gold. And I'll be rolling coverage forward, by the way, from April. Silver continues to keep itself alive. It leaves unfinished business above with each of its pullbacks. It, on Friday, by gapping up above all prior sessions in a multi-session range, had created unfinished business at 23.53 that required being tested. Really nice intersection of support that held, that launched, that satisfied, and didn't reject. In fact, there were 2 consecutive higher closes above that pattern that required at least an eventual third higher close. We got that. This was already satisfied. Yesterday's gap above all prior highs came back to lower prior highs, already neutralized that attraction. So I suspect this is a longer, more productive rally underway. But having said that, this pattern in particular, there's no bullish reason to retrace back the SA's low. So, or at least to close under it. So with that one caveat, literally, so long as the 23.55 interim low, yesterday's low, is not broken through a close, the rally remains intact. Long bond dancing around here. It continues to do that instead of, like the last opportunity, to finally keel over for a deeper correction, at least a correction, maybe something more substantial. We'll have to see how it develops. And really, I'm seeing how it develops. If, in fact, we're finally going to break lower to this deeper corrective target, 174.14, after all this delay, there's growing potential that it's because this was entirely distributive. At this point, it's not even that bullish to fully correct, to get rid of weak-handed sellers. There's 2 flavors of corrections. One is retracing existing ground coverage that's already been covered. The other is just the passage of time. That's how we see technical indicators neutralize themselves. Older data drop off and are replaced by newer data for that period that we're tracking. So because of that, closing above 131.08 would start to suggest that that's it for the pullback. Here's the overnight. Closing above 131.08, that's it. I'll take my eyes off 127.14 at that point, where I'd consider being a buyer, and start consider being a buyer, or at least anticipate rates back down, moving back down, as the long bond starts moving up. That's on the long end. And then crude oil is working through my bounce limit. Or at least it's still hovering around here, but it's not rejecting it. Just the act of not rejecting sometimes. Sun Tzu says this. Or no. It wasn't Sun Tzu. But sometimes no action is action. So we got to the bounce limit. Held it for a second consecutive day. But we still haven't rejected it. In fact, we're embracing it. The rally is embracing it, and now overnight coming to its highest levels into the weekend. Now, weekends often in crude oil will take on a geopolitical premium, geopolitical risk premium. So we'll see how we close it. Actually, I would give this coming out of the weekend, but I wouldn't be short this into the weekend, not with a higher close. And after 3.5 sessions without rejecting this pullback limit or this bounce limit, let alone closing under the sell signal, 71.10, not sure we shouldn't be long into the weekend, but we'll look at this later today. And then Bitcoin, this is coming from a position of strength, having maintained breaks above two separate resistance points for a 24-hour window. Yeah, this wiped out my lines. So considering this to be a pullback, just a corrective dip, it's very sloppy, very messy, but at this point, with RSIs making higher lows against price making lower lows, there we go. Back above the interim high, back above downtrending resistance, back above any trigger really, should be very predictive and very obvious that the rally has resumed. So right now that intersects anywhere from 28, well, around 28.5. All right, that's it. Sorry again for the delay here. We literally went from black to bright in a matter of seconds. Usually the systems don't come back that quick. My systems don't come back that quickly, so lucky us. Meet back here at 9:15. We'll see what immediately actionable setups there are for the open. Good luck today. Okay, good morning again. So it turns out we had a little educational class this morning, but doesn't look like it's going to be directly applicable, and that is the Globex flip. I've moved its card. The Globex flip, which having probed yesterday's range overnight, exiting the open at 9:45 under the Globex opens range, first hour's range, exiting the open under 78 would have been bearish. Dipping into that range as it was, but earlier, and recovering it through 9:45 would have been bullish. None of that flies or plays without actually testing that range post-open. So it still could happen, I suppose. It's not common, but it wouldn't be unusual for, anyway, the first 15 minutes to dip back into this Globex range. 40.78 to 40.82, and either recover it through 9:45 or break lower. But the longer it takes, if we're not already testing it this close to the open, it's probably going to hold if it's even tested. And it's not being tested. Instead, we had some favorable reactions to the pre-open economic report. We've got Chicago PMI coming out at 9:45. That is released, by the way, institutionally several minutes earlier. The result, the response, a reaction in the market very often is duplicated. It's not a buy on the rumor, sell on the news situation. The institutional reaction before 9:45 to Chicago PMI is often duplicated when we retail folk get it publicly. And then still another high-profile influential report at 10. That's the consumer sentiment and all-day long quarter and end-of-quarter window dressing. All in the context of Friday factors. So, as far as the open goes, it is less relevant, but still relevant that the overnight did fend off a sell-off attempt. But if we can just come out of the open above the overnight highs, and I'll give the earlier highs, the pivotal highs, the highest prior to the actual highs, the benefit of the doubt, 40.94, really 40.92. Just holding, I'm not going to sell anything above 40.92, and maybe not even above 90. And back under 88 gets very compelling, not just tempting. But otherwise, remember the next higher target is 99 to 41.01. So starting to get influential there. I'd like to, before being a seller at this point, as long as it's being attacked by a sentiment extreme overnight, I'd like to see that tested before being a seller. I'll sell weakness if it's too deep, but otherwise I'm a buyer down to 40, 90, 91. Given the opportunity, it's not that big a stretch right now. And if the open, the first 15 minutes can be exited above this pre-open surge, above 99, we'll be looking for, obviously, 41.01, but 41.18, 41.20, and other stuff. But perhaps even more importantly, taking control of the morning. All right, let me get this recording turned around, and then I see a question. I'll be right back. I'll have levels on screen, of course, as we get into the open. So there's a question. Okay, bonds are trading above 130.12. If the close is below that, would that put in play 127.14? So let me explain the bonds. So this is the relevant level above. That's 131.08. This is the relevant level below. That's 127.14. The initial, when we entered this range, we didn't know we were entering a range, but when we entered this range back here on the left, that created selling pressure. That reflected selling pressure that was looking for 127.14. Are we going to get there? Or is that just going to be the narrative that keeps pressure on bonds? We haven't invalidated the pattern from several weeks ago that put into play 127.14. We've come back up to its upper end, but we also haven't broken lower. Its first break lower hasn't extended. In fact, since then, it's kind of developed into its own low. So this is why I've been discussing this from the perspective of, we just added this buy signal yesterday, in fact, that so much time, in fact, a specific amount of time has elapsed, still forming this range that if we're not breaking lower, we're basing. If we're not even breaking lower, just to refuel down to 127.14 to snap back up and resume the rally, it's because we're already basing and I'm getting more aggressive on the buy signal. Anything in between is noise. Really, anything in between 129.10 and 131.08 is noise. We just happen to be in another pattern that already broke lower again, held resistance to react down into from, established another pattern that identified another sell signal under 131.08. That hasn't been rejected. It's been productive, but it hasn't yet broken to fresh lows. The lower end of what this previous pattern said, we've got to see that before we get stronger-handed buyers to resume the rally. And that was right. We haven't seen that, and stronger-handed buyers haven't resumed the rally. But these guys back here lose their say the longer that they're replaced by more recent reinforcements or even counter-trend sponsorship that doesn't want to wait so long. Not yet to the degree where I'm throwing in the towel on 127.14. That's why I still have the path laid out. But 130.12, I don't know what that relevance is in the question. It's not any level that I've been identifying as actionable. So let me know if there's something I'm missing with that. But otherwise, also let me know, please, if I've left anything out in explaining the bond. All right? Be right back. All right, so the open has blipped down, got into 90. I don't want to be a seller above that until we've actually retested the pre-open high, if we do. But I will be a seller. Let's get precise here. Yesterday's cash session close equated to 81, 80.75. And the opening print 90.25. So if we compare that to the proxy for the gap back to yesterday's close, that's 84. Not a big opening dip. Not really that great of a deal. It may be a great deal compared to where we're going, but in the open, I really want to haggle. I want to get a good deal, not just a good price. When a trend or an objective is established, I can be a little bit more lenient. But right now, this is just more reflective of optimism. It's actually 88, which is the bias. You can see it on the green. I'm sorry, the red line and the green line being the bias signals. Their targets being once removed. It is supportive. That's why, and its resistance, meanwhile, or coming into the session, that's why its recovery would be so bullish. I'm actually going to accept that as a decent pullback. If we can just start taking out 97. Certainly vulnerable to whipsaw. Everything is vulnerable to whipsaw. Mostly, but always. Mostly during the open, but always anyway. But I'll start giving buyers the benefit of the doubt. Buyers the benefit of the doubt that they are maintaining this open above yesterday's high. Back above 97, at least with a relatively tight stop if it is actioned upon sooner rather than later. Several minutes. Well, first of all, we're 3 minutes into the session. Secondly, even several minutes from here, anything during the first half of the first 15 minutes, had we been testing support, that would have been more compelling. Just a little too quick and irrelevant. Otherwise, I'm still interested in the level that it happened to test. It was testing 40.90. So that's going to be a critical level to hold through 9:45, by the way. Now we are probing, notice we're probing the overnight high. Not the knee-jerk reaction to 8:30's report, but the earlier overnight highs, pre-midnight, etc. Its recovery alone through 9:45 would at least suggest buyers are gaining traction. Back under 40.90.50. 40.90.50 is my nearest actionable sell signal. You know, there's no requirement to take any kind of a signal at any given time. Right now, the market is actually trying to figure out what it wants to do today. It's absorbing a lot of stuff, everything from retail fund orders that came in overnight. to any last minute stronger hand or bigger hands at least portfolio adjustments. And this is the quarter end, so there's going to be other stuff like that through the day that might exacerbate any initial moves. So right now there's a buy signal or inflection point at 40.97. It's been probed by at least 4 ticks, so we start the clock ticking on 4 minutes. That's a dynamic window. It's not a fixed window like the time axis that is under the charts. If you look under the charts, there's the timing windows, the fixed timing windows through the day, but a dynamic window that opens based on an action. And here's an action. There's an inflection point at 97. It's been pierced by at least 4 ticks. 3 ticks would be irrelevant except after the first hour. During the first hour, 4 ticks to activate the sequence, the dynamic timing window of 4 minutes. And it could sit here or it could extend higher during those 4 minutes. Whatever, it could plummet during those 4 minutes. Whatever it does, once that window is open, 4 minutes later, we look back to see what was the high of those 4 minutes. Anything higher is reinforcements. So nothing that I've just said is here's where to buy. This, what I'm discussing is here's what makes price action any likelier or less likely to continue playing out in a certain way. So we're now establishing the 4-minute high at 98.25. It looks like a little too close to it to rely on that being the high, but pretty close to the overnight high, the actual knee-jerk reaction to the headline, and halfway through the first 15 minutes. Maintain its recovery through 9:45. It'll be really difficult for sellers to retake control from that. So now that we've probed a fresh high, I'm looking at this last down leg. This is not predictive of anything, but there is a singular numerical representation. There's one number that represents this entire range. It's the 61.8% retracement, depending on what we anchor this with. I like to ignore the errant ticks, the sentiment extremes, so around 91.50. I can raise the sell signal a little bit to 91.50. So we've got all these influences, not a whole lot, but multiple that are layering themselves to perform or not perform or perform in specific ways, complementing each other or contradicting each other, but at the timing window, the next one being 9:45, their resolution, if there is one, can give us increasing confidence in which way the market's leaning. Is it trying to absorb this post-open or this opening surge that clearly anticipates the last couple of sessions are going to continue behaving as such? So, interesting sentiment extreme. Sentiment extreme is often, this is kind of small, but often we certainly want to be aware of that because from a contrarian perspective, that can be bearish. That can basically identify the extreme. When I see this, it makes me want to get even more aggressive on the sell signal. But I'm also allowing 4 minutes of counter trend detouring back under the inflection point. That's just 3 minutes in. Can't be doing both. Can't be testing the buy signal and triggering a sell signal with the same bars. So I want to let that evolve. Also, that's the usual attention span of weak-handed counter trend sponsorships. So give it a minute. We're now 2/3 of the way through the first 15 minutes, still overlapping the pre-open high. Detached above the earlier highs. Remember, the first 15 minutes is significant, not only because it is processing a lot of stuff that kicks in at the open, but also because that's the handoff. That's the handoff from the overnight sponsorship to the intraday. The overnight sponsorship is looking for exits or a reason to stay involved, and the intraday crowd is coming in. Overwhelming. Diluting the overnight crowd. So we're looking for any sign that the intraday crowd is reinforcing whatever the overnight was producing, or whether there's any counter trend sponsorship. It could be neither. But that's typically 9:45. We look at the range in 9:30 to 9:45, and then 9:45's print relative to that, relative to anything that was being tested during the first 15 minutes, and we get our bearings from that. Still extending higher through that first 15-minute high, or through the opens, the first 4-minute high of testing the inflection point. That's reinforcements. More input here. This is the bias up target. It's not even in play officially. The bias up signal has to be exceeded through 10:15 to put into play a test of the bias up target. Now the bias up target can be exceeded through 10:15 to renew the bias up. So the first 15 minutes are about to elapse. If we're still overlapping this pre-open high, but up in this range above the 4-minute high to testing the buy signal, I'll give the upside a benefit of the doubt, every benefit of the doubt. But still track a sell signal because there's another setup that could come into play, and that is having tested the bias up target with a half hour to go until 10:15. This is not unusual at all to see the next 30 minutes work right back down so that at 10:15 we'll have rejected both bias up parameters, not just failed to extend through the bias up target, but still triggering bias up, actually rejected back under the bias up signal as well. Having tested the bias up target, I call that a synthetic bias down because without even touching the bias down signal, that would put into play offsetting tests of both bias down parameters. In other words, it would put into play the 4058 bias down target. Just by breaking back under 88 through 10:15, we'll have that likelihood, if not even, or that attraction at least, if not reliability. And it looks pretty official that at 9:45, we're still going to be overlapping this pre-open sentiment extreme. I'll still give buyers a benefit of the doubt. I like, it's not fully formed, but it certainly has potential to be a running correction. It was entered aggressively. We've got a brief series, whether it's a channel or a wedge of higher highs, higher lows overlapping each other. One thing I want to see is exiting this in a aggressive manner, as aggressively as it was entered. So that's stage one, stage two, stage three needs to basically match stage one. Exit that as aggressively as it was entered. But if this uptrend, this shallow uptrend, it hasn't fully formed, as I said, if its uptrending support were broken or the last touch of it, which happens to coincide at the inflection point, by the way, 4097. We start probing under 4097, this whole setup disappears. It's not fully formed at all. Getting kind of active up here. If this is what it looks like at 10:15, it's a bias up. Yeah, it will have held the target, but it'll still be a bias up environment. And on Fridays, because of those 2 days of illiquidity fast approaching, we just get different behaviors or influences, nuances. But in this case, the morning's bias tends to persist through the noon hour instead of just through 11:30, all the way into the afternoon bias window. So if buyers don't intend on extending higher, if buyers have any intent whatsoever on pulling back, we'll probably see that start to develop pretty quickly here. And it's kind of been a while without keeping this timing of a running correction that would probably by now or within a minute or two extend sharply higher. So keep this aggressive, basically duplicate this surge, literally 8 or 9 points higher from the last touch. Start probing 4105, 4106, and we'll take seriously. Just 40, just get out through 4104. Until then, this is just not reassuring that upside momentum is actually intact here. So now I'm going to start getting aggressive on a sell signal. So the inflection, after it had been probed above by at least 4 ticks, allowed 4 minutes of counter trend detouring, the usual attention span of weak-handed counter trend sponsorship. Got down to 40.96 or so. So if buyers aren't coming in here, if they can't exploit the reinforcement, if they can't continue behaving in a bullish manner that this pattern says should duplicate stage 1 pretty quickly. And as of 9:45, when they could have exceeded the overnight high, this knee-jerk reaction, they didn't. They were overlapping it. None of that is in its own bearish. It still keeps the door open. None of new highs are not a sell signal. But neither do they ward off distributive patterns from forming or rejecting a malformed bullish pattern. So, again, I can come to within 1 or 2 points, buffer under the room for noise, the noise of actual trading that's taken place down to 97, or 96 that is. See how that measures out. So raising the sell signal to 94.25. So I'm really being generous, still considering this to be a running correction. Not so generous that I'm really anticipating that we are necessarily going to duplicate stage 1. I want to see for this 5-stage pattern that may be forming. We'll talk about it if it does, but ignore it if it doesn't. This needs to be, the stage 2 needs to be a running correction, and it's getting a little heavy on the top here on the second half, turning into second 2/3. But it needs to form that stage 2 running correction and then duplicate stage 1. Having entered it aggressively, needs to exit it aggressively. That's what stage 3 would be before a stage 4 plateau, and then we get all sorts of predictability from there. Without without stage 2 actually forming pretty efficiently a running correction, B, stage 3, the aggressive exit gets less and less likely. Again, we're not so far removed from the beginning of this pattern that I'm willing to ignore, at least, that there's a duplication of stage 1 exiting this range, but it's getting less and less likely. So much so that I would be raising the sell signal soon. Any questions, let me know. I mean, we're waiting on evidence. So the pullback limit at this point, because we can replace this inflection that needed to be probed for 4 minutes and then higher to identify where reinforcements had arrived, and meanwhile had room to be probed below by 4 minutes, minimum 4 minutes, just as the usual attention span of counter-trend sponsorship. Having extended to this degree, we can actually identify a higher inflection that serves the same purpose. At 40.98. Unlike the original inflection point, the buy signal that was probed or counter trend detoured no deeper than its first 4 minutes, this now replaces that. This pullback limit now replaces that. It can be probed for 4 minutes, the usual attention span of counter trend sponsorship, weak-handed counter trend sponsorship, without reversing the trend down, actually, without violating the uptrend that's trying to form. Now, think about what that means. If we can start over on a pullback that is just weak-handed sponsorship, another detour, those 4 minutes can be deeper than the first 4 minutes and still be a correction of the same buy signal that's higher. That's what happens when we overlay price with time. So we're not just looking at price, here's an inflection point, but also what the test of how it resolved at a certain window, whether that certain window is fixed, first 15 minutes of volatility, for instance, or any of these other timing windows that will develop during the day, or whether it's dynamic, the first several minutes probing a signal. So what is giving buyers any benefit of the doubt is that the first 15 minutes did hold up. Now, they're going to start losing that benefit of the doubt. The benefit of the doubt needs to be exploited. You can't just rest on your laurels in most cases. Not unless resting on your laurels, say gaining traction through one timing window, is used in order to isolate counter-trend sponsorship, like let this dip think it's getting away with something for 4 minutes and then swoop right back in and swallow it, spit it back out to the upside. But right now there is an attempt by sellers. We know it's not arbitrary because here it is touching a relevant level, the pullback limit. And if it's probed, that's where the attention span of counter-trend sponsorship starts the countdown. And it's also the attention span of stronger-handed sponsorship. If, in fact, this intends to resolve up and trend up this morning, then the usual attention span of stronger-handed buyers in being patient and letting sellers trap themselves. However you want to characterize it, either or both ways, because there's all sorts of dynamics going on every single tick. It is a line in the sand. Nice reaction up. Now this is too late, by the way. This is not that stage 5 correction I was describing stage 1, entering aggressively into stage 2, a running correction that stage 3 resolves aggressively. I don't care how aggressive this leg is, this bar or bars that may now develop. It's too late. The running correction really got too choppy. But there's other ways to skin a fish in the sea. There's plenty of cats in this, something like that. Anyway, so another fresh high. Here we are coming out to 4104 at least. Pullback limit is 4100 half. And we start all over. Rinse, wash, rinse, repeat. Now, with that being a knee-jerk reaction to consumer sentiments number, the first 60, 90 seconds following that news, is weak-handed. By definition, that's who responds to news. That's strong hands step back. They don't have to play in that. They probably already anticipated, and doesn't matter. No surprise. So we're 90 seconds out plus since the news, still holding that prior high. As soon as I know where the 4-minute low is to detouring back under this pullback limit, I'm going to get even more aggressive on the sell signal, because if in fact buyers are expended, we're going to head down pretty sharply, pretty quickly into 10:15 and 10:30. But I'm not throwing in the towel on buyers yet, not until the usual attention span of their counter trend sponsorship is more productive than just the 4-minute low, which would start to suggest it's not just weak-handed counter trend sellers, but lack of commitment among stronger-handed buyers. I'll get a little bit more aggressive on the sell signal. Had the bias up target not already been met, which will still, if the bias up signal triggers at 10:15, we'll expect a retest of the bias up target. But it has already been met, hasn't been put into play, but we can't ignore that. The patterns through yesterday's close that identified the target as being relevant aren't anyway satisfied to a degree. They're buying pressure. And this is a pretty critical window, especially for a Friday, to hold on. If we can hold on through 10:15 and 10:30 without rejecting the bias up target, even if we're just hovering here and not yet extending above it, that all of a sudden can pretty much marginalize sellers through the noon hour. So this delay here is not just staking out not necessarily staking out a position of strength, not on a Friday. On a Friday, it's it's not a true story, but the shark, that if there's actually one species of shark, if it stops swimming If it loses its forward motion, it rolls over and for some reason is unable to right itself, or at least rolls over. This is that species. Let's put the legend back up here. So there's a number of different setups that come in, go during the day. They have to do with price action during timing windows, be they fixed windows like this axis under the stock chart that shows the fixed windows. First 15 minutes is a window. There's a couple others that I'm about to describe. There are dynamic windows. Dynamic meaning here's an inflection point that the swings were able to identify. And as soon as it's probed by at least 4 ticks, or 3 ticks after the first hour, but 4 ticks during the first hour, just to account for noise, allow for noise. As soon as it's probed by at least 4 ticks, starts a 4-minute countdown. Again, 3 minutes any other time of day. That's noise, or that's potentially like any inflection point. Any of these horizontal brief lines is an inflection point. Its utility may be different in each instance. It's blue with an arrow, that's a buy signal or a sell signal. It's red in an uptrend, that's a pullback limit. Green will be the counterpart to this in a downtrend, a bounce limit. But once an inflection point is probed by at least 3 or 4 ticks, once an inflection point is probed by at least 3 or 4 ticks, it starts a countdown. And those 3 or 4 ticks can lead to 3 or 4 points or more, or not necessarily that much, but more importantly, once we qualify with 4 ticks, the countdown, 4 minutes must elapse. Not all 4 minutes have to be spent above the inflection point, but 4 minutes must elapse to identify the 4-minute high, or 3-minute any other time of day than the first hour. And anything higher is reinforcements. And none of these are necessarily actionable. You can have a buy stop right above the inflection point, or you can wait for 4 minutes to develop, 3 or 4 minutes, and navigate it from there. Wait for the reinforcements, or hesitate to see if reinforcements are going to be introduced at any reasonable price, or better yet, perhaps, wait for a pullback to the inflection point. Going to miss some trades doing that, but also going to stay out of some others that shouldn't be taken. Shouldn't have been taken. But we do it anyway. So, the pullback limit, the buy signal, sell signal, these are dynamic. They start a clock ticking as soon as they're probed by at least 3 or 4 ticks to start marking the usual attention span of weak-handed counter-trend sponsorship. Now, there's nothing below. There's a 4-minute low to testing this pullback limit. Under 4100 half. Down to 4098.50. Nothing bullish or bearish inherently about not yet immediately responding up. But we do have the 4-minute low identified. 1 or 2 points of room for noise below it. I wouldn't be a seller any higher than that. In fact, I'm a lot less aggressive than that down here at 95.50. But again, if sellers are absorbing this, if buyers just can't make it happen, and they may be, it may not look like it because they're just ranging sideways, But they're really just playing down the clock right now. They're trying to last out 10:15 and then 10:30, absorb the selling pressure that's getting thrown at them, because those sellers are going to dry up. If those sellers aren't being rewarded for their efforts at 10:15 or late at 10:30, then they'll all but marginalized for the balance of the morning or even through the noon hour on a Friday. And suddenly we start seeing the rally resume. But because sellers, if they are going to be productive, need to be productive through 10:15 or at the latest through 10:30, back under the lower green line, the bias up signal, and because that would be doubly bearish, having already tested the bias up target, I know there's any kind of sell signal, any productive sell signal is going to be very aggressive very quickly. I'll deal with the whipsaw if that's necessary. But I don't want to miss that. It happens often enough to be positioned for it. Meanwhile, we'll anticipate that coming out of 10:15 and or 10:30, the rally starts resuming. And on a Friday, there's no straight lines, of course. Even if we knew with 100% certainty we're heading to 41.18, no assurance of the path there. It just comes down to the window. We have to trade around the ebbs and flows, but just making it through the window or windows, 10:15, 10:30, without sellers threatening, we'll look for higher highs. So here's some other setups that develop using this price action. Not all price action is relevant, but it informs the window that's being entered, in this case the bias window, the morning's bias window. I mean, we can get predictability on the next 60 to 90 minutes. It's not a whole lot of time in the scheme of things, unless the scheme is basically a 6.5 hour day. And we can do it twice. It's a process of elimination. We don't necessarily know where buyers are going to take us if they gain traction, as it turns out. We just know that they have absorbed sellers through 10:15 and 10:30. We happen to be sitting at resistance, so that inhibits the potential for extending higher without dipping first. But it also tells us what price to look at for being exceeded as resuming the rally. So for all intents and purposes, it is 10:15, just a minute out, but we're not even threatening the sell signal. Lower tick here is not threatening a signal that's still a couple, 3 points away. It's still overlapping this current range. Nothing ever assures that the bottom can't just drop out. Always have a stop, not a mental stop. You can always re-enter long if you didn't want the stop triggered, or as it turns out, it was just a rogue leg, not an actual reversal. But when we want it to be triggered, we can't be relying on those two things, not with a mental stop, that we're going to convince ourselves to go ahead and take action, and also the fast market conditions that could be developing to be able to act in time. So, if you're new here, a lot of this comes at you. This is the best way to learn it, is to immerse yourself in this conversation, this ongoing description of almost every tick during these concentrated windows where those ticks mean something. We're now, 10:15 to 10:30, that's it. We've established a lot of stuff, a lot of issues here. And also establishing some stuff by not even doing some things that could be getting done. The first 15-minute range, for instance, is pierced a little bit in a knee-jerk reaction to news, but that's it. It's holding. And looks, it's a little premature to say it's going to have held through 10:30 as well, but exceeding the first 15-minute range that isolated this probe, a knee-jerk reaction to news, so not that relevant, but first 15-minute range didn't react back down to any great degree into from its reaction up. That's not arbitrary, but looking at the first 15-minute range, a 61.8% retracement of it down to 40.94, not even attacked, not even threatened under its counterpart. Just noise at the high. The next print for that setup is 10:30. If 10:30 can retrace the first 15-minute range. To what degree? That depends. If between 10 and 10:30 there had been something to isolate, like this probe, it's a little less meaningful, this probe, because it's a knee-jerk reaction to news. If there was something more organic, trying to trend up and then reversing back into the range between 10 and 10:30, and that reversal as of 10:30 had retraced 61.8% of that range, of the first 15-minute range under 40.94, that would be bearish. That would be almost as bearish as the Globex flip that almost formed by having probed yesterday's highs overnight and then threatening to exit the open under the Globex opens first hour. That held. Had this setup been duplicated post-open, reversed from a fresh overnight high back into the Globex's opening range and recovered or held, that would have been as bullish as it gets for the day. And that didn't happen post-open, and its buyers have clearly been rewarded. Or to reverse back down and exit the open under that Globex opens range, isolating the overnight probe above the intraday high. That would have been bearish, but we didn't get either. So it looks like just plain old gap up, extend higher. Let's see how this extends higher. There's one other setup we'll talk about at noon if this has trended up through the morning. The gap and pause, that's a pretty compelling setup. It's really interesting because it would identify the next day being likely to trend in one direction and tell us that that trend was likely to be reversed in the opposite direction. A little more influential and forward-looking than just we're sitting at support. And then factor in the swings, calculate the swings, the Fibonacci retracements and projections, apply them in the appropriate spots. Suddenly we get a lot of predictability. So, coming into the bottom of the hour, still not even trying. If suddenly this close to 10:30, this far past 10:15, that has already triggered a bias up, if this close to 10:15, suddenly we start breaking lower, not very credible as being strong-handed. More like the uptrend is stalled, so we're going to go look for stronger-handed buyers with a discount for them. Now, it's a narrow enough range that under 95.50, I'm still going to suspect, even I might not trade it if it's after 10:30, but I'll still expect things are going to be discounted from there. It's Friday. There's wild cards. It's not expiration, but there's still wild cards from this being Friday. There being 2 days of illiquidity fast approaching. So even if we knew there were going to be a detour looking for stronger handed buyers and was going to find them and lead another up leg, on a Friday that could be a more substantial detour, so maybe worth trading anyway. But I can't get any higher here. And if we make it through 10:30 without even reacting down, again, that doesn't prevent there being a reaction down, but too late to have been strong-handed sponsorship, so very likely to recover sooner rather than later. Any questions, please ask. So coming into 10:30, much too late for sellers to do anything that would be something done by strong-handed sponsorship. So that's not equivalent to saying there's not going to be a downdraft. It's saying if there were a downdraft now, it's probably weak-handed sellers. So at these timing windows, that counter trend sponsorship that's been trying like crazy to push price down, it's been suppressing the upside. If they haven't gained traction, they basically disappear. Not at the snap of your fingers, but they start to and have already started to dissolve their counter trend sponsorship. And they go back to the strategy room and let buyers have control for this timing window for the next hour, essentially. That doesn't need or care really so much about whether there's an artificial catalyst like a headline. It clears the way for a favorable reaction to be more impressive, more productive if there's a knee-jerk reaction to news. But headline reactions are still going to be likely to retrace by at least 61.8%. So nothing needs to be chased. Except the princess. Okay, that's really it. We've got a fresh high in here, another pullback limit held. With the fresh high, it's not high enough where I can calculate a new pullback limit. But because it's a fresh high, the old pullback limit is repurposed. Gets another 3-minute test. 3 minutes, not 4 minutes. Minimum 3 ticks, not 4 ticks. We're past the first hour. If sellers still intend on stopping this rally dead in its tracks here, then they need to exit the bias window in an hour, at least enter the noon hour, under this lower red line. This lower red line, 4074. Can sellers get that done? I've seen it done lots from this particular setup. It's just very uncommon. Not something to position for, but always be prepared for. But otherwise, there's the countdown. Buyers played out the clock. Sellers didn't take control. I'm still going to leave 95.50 identified because there's that much room for noise if it wants before it starts even suggesting momentum is reversing down for whatever duration to whatever degree. And meanwhile, the trend is up. Any questions, please ask. So let's throw in one more observation, two more really. One is it's after 10:30 and we're probing fresh highs. You know, their signals are already done. But that's just confirmation. That's the kind of behavior that you see when the sponsorship that was signaled is in control. After the first hour, they're still producing newness. The other thing is there's a pullback limit. Remember, it was retested. There's the low. All 3 minutes that is of the probe that was allowed by counter-trend sponsorship didn't have to be spent under it. Just started the clock ticking on what we would allow. Another fresh high. I'd like to see RSIs get back into overbought territory. I don't mind them making higher highs, but it'd be a lot more reassuring to see them commit. Pullback limit is 4102. All right. Any questions about any of this? Please ask. But now it gets a little quiet. We're just monitoring and adjusting to what has been signaled. And if anything about it changes, then we'll certainly come in and update that. No straight lines. Always make sure you've got a stop working that reflects your risk tolerance. We can always re-enter long. If this is a knee-jerk reaction to a news item, to a headline, then we already know it's going to recover. Or at least retrace at least 61.8%. We just don't know from where, so can't just jump in on it. So we're going to look at another setup here. These pullback limits, red lines, green lines if we were in a decline, bounce limits. Like the inflection point, they offer more information than just signal. What I'm looking at now is the minimum 3-tick test. So the test is underway. The usual attention span of weak-handed counter-trend sponsorship has begun. All 3 minutes don't have to be spent under the pullback limit, but we still give that much time to identifying how productive were those weak-handed sellers. Well, they were this productive, down to 41.02. So after those first 3 minutes, anything lower is no longer the weak-handed sellers, or at least, nothing's perfect. But we stop being so confident that these are just weak-handed sellers. Meanwhile, we assume it's weak-handed sellers because we have other reasons. Not because of the bounce or the pullback limit being tested, no, at least not yet any deeper than its first few minutes, but because of other objectives above now that are being put into play, because the bias up has been exceeded through 1030, etc. Well, if I have that kind of a likelihood that the bias up is intact any other day of the week through 11:30, today on a Friday often through the noon hour, we could be much higher. Not that it's assured that we will be, but the vulnerability is there. And here we are testing, just now having dumped a bunch of sellers, weak-handed sellers. It turns out, as I'm talking, things are getting less attractive. But often that 3-minute low, none of these other dips, and not this one either, it turns out, this 3-minute low will be in the process of being tested. We'll be hovering down there at the end of the 3 minutes. Think about that. At the end of 3 minutes of weak-handed counter-trend sponsorship, we'll be sitting at that extreme. We'll be that much closer to where we'll know it's wrong to be long. How attractive of a buy is that? And then layer back the other stuff about the vulnerability to extending higher. If our stop is 1 or 2 points under 4102, say 4100, 4100 half, and we can get in toward the low, or right now we don't have to get in, we could just throw in a limit order. Fortune maybe brings in another dip. This did recover kind of optimistically. Throwing a limit order around 4102.50, 4103. Still pretty close to the stop. 3-point stop. Are we looking for 2 or 3 times that upside from 4103? 6 or 9 points higher? 41, call it 4110, 4111 really? Yeah, I am. And then on to 4118 potentially. So it's not as attractive right here. Nobody says we have to buy it here. We could throw a limit order in, and maybe the limit fails. Maybe the limit is filled and on the way down to 40.95. We're going to have a stop immediately activated. But more often than not, even the fast market condition of that kind of a collapse is still going to be absorbed by overall, if we're using sound signals and expectations, or that generate expectations from their previous historical likelihoods, and we buy it right, which we now know the definition of right, as close to 4102 as possible. Do that all day long, all week long, and overall, the expectation is not necessarily to have more winners than losers. I really want a system that generates more winners than losers. But that will make much more on the winners than we lose on the losers. Anyway, this is like the other pullback limit tests that were even shallower. I mean, this useless. This looks real precise and really smart, and it's totally useless. This is more of a 3-minute or 4-minute test during the bias window, but we had other windows that were operating, so we didn't really need the pullback limit. But on not necessarily trend days, but the trending portion of most days, even if it's not a trending day, the pullback limits, using that technique to enter when made available, when a pullback is made available, that we're nearer to its 3-minute low, those start getting layered on each other, and rather than a strategy of selling into strength, selling or booking profits, leaving a runner or runners going, instead we're leveraging up because we've got a very definitive spot where we're out. That's too deep on the pullback limit test. And we don't just apply that randomly, but when, for instance, in this case, the bias signal says that the balance of the morning through 11:30 into the noon hour, or on Fridays, even through the noon hour, not has to go up, but maybe likelier to go up, if only because it's more vulnerable to going up. All right, any questions, please ask. So there's other Friday factors too. That is, this being a Friday. Here, let me get that card back out. So we didn't have an opening thrust today. That was last Friday. Had a great opening thrust set up that told us a likelihood, an overwhelming likelihood that having absorbed sellers during the first during the open on Fridays, that opening thrust tends to be predictive for the rest of the day. Didn't have that today. We do have the morning bias that tends to persist through the noon hour. This is a bias up. Regardless of the target having been met and held through 10:15, it was still a bias up. The bias up signal was exceeded. It would have been more predictive and reliable had the bias up target also been exceeded at 10:15, but it wasn't. Still bias up. So here it is, exiting the afternoon bias window, which is at 2:30, above the noon hours extreme. We'll see the noon hours range and see how that stacks up. That can often trend into the close. And again, it's not a requirement, and its likelihood is only because that's its vulnerability. But it can marginalize counter-trend sponsorship sellers. So we're never going to have a requirement for any segment of time to behave in a specific way. But if we can, through a process of elimination, using patterns that historically not require specific outcomes but limit them, then we can see a lot of windows that marginalize counter-trend sponsorship. And if we've got a 60, 90-minute window a couple times a day that is more vulnerable to behaving in one way than another, that the one side of the equation is pretty much marginalized, that if price action behaves counter-trend, it's probably not them doing it, just a temporary knee-jerk reaction that we can be prepared to exploit. And it's just a matter of having strategies surrounding that, and those strategies being in your trading style, adapted to your trading style. And that's what I'm doing, is identifying the levels to execute, or at least know where those strategies should be considered, those timing windows. And I'll discuss as many of the strategies as possible at any given time. I can't discuss them all at every single time, so that's why it really helps to immerse yourself, especially during the morning. You can tell during the morning, especially during the first 60, 90 minutes, we are most active. We see the most formative activity, so there's more to talk about. And you can read all you want about it, but seeing it and hearing it in real time, absorbing those two streams together simultaneously as a new experience, that is the best way to internalize. So we've returned to the high. Still don't have overbought RSIs. That is a concern, by the way, that we're not taking RSIs overbought. Did I say oversold? Overbought. We want simultaneously overbought RSIs. That's going to create pullbacks, but pullbacks from simultaneously overbought RSIs require being recovered. By the way, there's a fresh high. It's just a tick, but it's a fresh high. I just used the calculator to confirm that. So that means that if I can't calculate, if it's not enough of a fresh high to calculate a higher pullback limit, this pullback limit is repurposed. It can now be tested again for the first time. Not getting any more aggressive on the sell signal. I will, after the top of the hour, often get more aggressive on the sell signal, especially as we come within view of the bias window lapsing 10 or 15 minutes away from the bottom of the hour. This is Friday. The morning's bias tends to persist through the noon hour, not just into the noon hour, so I'm not going to get that aggressive. I mean, we could. Here's a 3-minute low to testing a pullback limit, 1 or 2 points buffer down to 4,100. I could be anywhere in here on a sell signal. I won't be any tighter than that. But I'm not even, I don't want at this point to entertain a being whipsawed out. Now, if time elapses and we're still sitting here, not taking RSIs overbought, not improving position, you'll see the sell signal creep up. Thoughts on a rug pull? If I don't sound like everything I say allows for that possibility, then I'm not saying it right. There's always a possibility for that. As far as today, is there potential for rug pull or a greater potential? Take away the overnight so we can get a better view here, and you can see we're into this rally. This is extended. So there is that vulnerability on any session. There's that vulnerability on getting to and through targets. 2 targets are being met today. 40.92 this morning. 40.92 and 40.99 basically. So, but we can't sit around waiting for something like that when the trend is established up. If we start exiting a timing window back under a relevant support, that's where we start to see the potential for a rug pull. This is a question from the simulcast. So there's not going to be if suddenly, for instance, we're sitting at the high, if suddenly we saw a substantial drop, from here, that's not a position of weakness. That's what I've been describing as a position of strength. Weak-handed sellers have been marginalized. We'll know that if there's going to be a knee-jerk reaction to a negative headline. That's the way headlines work. The question is who's doing it. If it's from a position of strength, be ready to exploit it because it's coming back. But we'll know there's vulnerability to reversing back down before it happens if it's something that's durable. So basically, instead of waiting for or anticipating a rug pull, I'm monitoring for the conditions that would enable it. Until then, I'm not trying to predict that future, a contrary future. I'm trying to see whether the current sponsorship has room, and they do. Nice ascending triangle here. So we take the ascending triangle, take its second widest dip, not the first, the second, back off the errant ticks, the top tick. So I'm expecting at least for that range to be exceeded at least to 4108.25. Just the room for noise above it. Start breaking above 4108.25. Got all sorts of attractions up here. 4110, 12, 4111. I'm really just saying numbers at this point. All right, so our high now is 850. Pullback limit is 4105.25. And I see a request for coffee. So I've still got a higher target. I haven't rejected this higher target, but that the higher target can be met. But I wanted this pullback to have held 178.55 and to have already been reversing up, and clearly it's not. Because of that, it changes things a little. Had we just extended higher into the 212, 220, higher prior low, and then reacted down, that would have been likelier to be the end of the road. The inverted head and shoulders, temporary reversal, and then resume the decline. But this head and shoulders is really losing itself. It's no longer developing. So we've got a different pattern here. I can try to buy it cheap at support in anticipation of it holding, and we're basically right there at 166.70. My stop would be, or 167.50 for that matter, 167 plus. I mean, that would essentially be my stop. Orange strength coming back above 178.55. There's not a whole lot of room for further weakness. As long as this uptrending support, parallel uptrending support, downtrending support, as long as this isn't broken, call it 160.50. Still willing to call this a temporary pullback. Nothing changes the upside potential. That's higher prior lows. It has yet to be tested from below. It doesn't require being retested from below, but if upside momentum starts gaining traction, that's the likely attraction, 212, 220. And its resolution is going to be predictive. All right. Still eking out higher highs, which is interesting. I mean, for the educational purpose, I appreciate that it's eking it out, because this is really all that we're able to do is see the vulnerability. Not that it has to be. Sometimes we get pleasantly surprised and we just start exploding to the upside and it lasts. Sometimes that bias that we get clued in on, manifests itself by recovering from dips. That's not fun. I mean, you'll be stopped out when you're long, but know to buy the dip with whatever method we're using for that particular setup. But this is, at its heart, this is really the most that we can really expect to see, not counting the pleasant surprises. And that's just to relentlessly keep peaking higher, because that's what earlier setups through 10:15 and 10:30 said. Suddenly, all these sellers that were trying to take control threw in the towel, almost in unison, because their attention span, the opening counter-trend sponsorship, their attention span ends pretty much here. That's a fixed window. There's a dynamic window every time one of these is probed, one of these brief lines, be it a actionable signal or a reaction limit. There's a 3-minute counter-trend, weak-handed counter-trend sponsorships attention span. There's 4111, 1075. Now, after a prolonged absence of being overbought, RSIs are starting to threaten to become overbought. And that's going to mean what it sounds like when it's delayed. So pullback limit is 750. This is where a probe by at least 3 ticks would start the clock ticking on the usual attention span of weak-handed counter-trend sponsorship. Anything deeper than that, later than that, could be more than just weak-handed. I appreciate anyone hitting the likes and subscribing to the YouTube channel. And I appreciate that because when I watch other YouTube streams, that's what they ask us to do. So I guess I'm supposed to appreciate that. I think the likes help get if I'm not mistaken, help get the stream a higher ranking on being shown to new visitors elsewhere. I doubt this is the degree of likes that's going to get anything like that done. But subscribe so that you'll know, because I only open this stream sporadically. This is not every day. Every day, all day, we do this in my... this is exactly what we're looking at simultaneously right now for subscribers in my video room. But we do this all day, every day. Here on YouTube, on the free simulcast, it's 1, maybe 2 days every couple weeks. If you want, you can go to the site, viditrade.com. Go to viditrade.com and you can just pick up a free trial, 1 week, free access, and see what it's like. You can also see the blog. The blog has all sorts of content. It describes the proprietary setups. There's so many more. Half of them don't even apply to the open. They'll have influence elsewhere during the day that give us that somewhat reliable predictability. viditrade.com. I'm going to be doing a promotion, announcing here a promotion. It'll apply. Go join now. It will apply. It's going to be a retroactive application anyway, but you get your subscribe to the Vidi Room, not just Vidi Views. Vidi Views is the name of the blog. You get those updates. Subscribe to the Vidi Room. You get them both anyway for the week, and if you subscribe, you'll get the room for free for the first term anyway. But I'll have a special added discount that I'll be offering on top of that. If you enjoy this, enjoy learning, I mean, that's a big thing. We don't always get opportunities to apply the learning, and when we do, we've got to have learned it already to be able to act quickly. All right, let's look at this. Here's some more stuff to consider. So remember, just ongoing, we're looking for the upper end of the channel. Kind of like dominoes, if the upper end of the channel were touched, that would necessarily also touch the last time that downtrending resistance, this Morse code line here, was touched on the way down from February's high. That's where this line originates. There is already, that test already produced a fresh low. There's no bearish reason to revisit this. Now maybe its test, as with its last test, begins a protracted pullback. But if it originates from here, it's because it's just a temporary pullback. And we're already anticipating that because we're anticipating the upper end of the channel, rising channel, to be tested, and that overlaps that level. So closing above it, especially closing above it a couple consecutive days, we just won't get any stronger bullish signal than that. And by the way, tomorrow's Saturday. We're doing the Saturday review at 9:30. That's where we look at the bigger picture and consider how it may have been affected through the week. Game out strategies coming out of the weekend, literally for Sunday night or Monday morning. So what I wanted to go over, though, also is this Fibonacci scheme. This is from the Tuesday to Wednesday gap. So this is the Tuesday's close, cash session close, which equated to 40.01. This is Wednesday's gap up. The opening print literally 40.40 or 40.44.50. And so that's the Fibonacci scheme. You know, if we got down to 41.18, and actually there's a retracement within here at 41.22, 21.50, that can serve as a proxy for filling the actual gap. 40.28 can be a proxy for filling the actual gap back to 40.01. And if we start breaking 40.28, that would actually start putting into play 40.01. Anyway, that's not in operation right now. What's in operation is the projection of that. This is such a degree of optimism that it can continue to be influential. And notice that it has been influential. Its Fibonacci scheme has continued to influence price action. We can look at, as well, yesterday's gap up from 58.75, which this will be kind of close to 85, 40.85. So this shifted right. This is the Fibonacci scheme from yesterday's gap up. Not so influential. It doesn't remain entirely intact. The proxy for its gap was already probed. But it's still going to be interesting when there's correlation. And then as far as today's gap, so we can, largely because, ignore this, that was post-close. Cash session close, where were futures trading at the cash session close? Equivalent to 40.81, 80.75. Today's open, not that far removed, but removed at 40.90.25. That's a pretty extended number there, the 261.8 projection. And this scheme is intact. It hasn't used its proxy for the gap, the 61.8 or 38.2 proxies for the actual gap. There's some influence. Not so much here, a little melted. 11:30, the bias window is officially starting to lapse. It's Friday, so it tends to persist through the noon hour, but that doesn't mean a straight line. And by the way, it looks like everybody's figuring it out. See how steeper the slope has gotten? So the pullback now is actually 41.1150. RSIs are simultaneously overbought, and that means that if there's a reaction down, as suspected, since RSIs were avoiding overbought simultaneously, 1 minute, 3 minute RSIs had simultaneously avoided overbought for such an extended window, that finally getting overbought would mean what it sounded like, and here we got overbought and we're reacting down. But because we're reacting down from simultaneously overbought RSIs, we know that this is going to be retested. The high is going to be retested. That's our likelihood. Actually rises to the level of being a requirement. It takes pretty much all available strong-handed buyers to produce a simultaneously 1 minute, 3 minute RSIs getting overbought with price highs. So by definition, a reaction down is sponsored by weak hands or by strong hands being patient. But strong hands are going to defend against the reaction down. Depending on where. We're overlapping this pullback limit, not by 3 ticks, so we haven't started the countdown on being able to probe it but for 3 minutes. Since we know that high is going to be retested, as soon as we know where the 3 minute low is, once we can start the countdown with 3 ticks that qualify the test of this pullback limit as being a probe. We start the countdown. We could be substantially lower after 3 minutes. There we go, 3 ticks. So we're starting the countdown for 3 minutes. If we're anywhere near that low at the end of those 3 minutes, we might want to buy it. Doesn't mean we can't drop deeper, but we know at least that there's a requirement to retest the high. And we can figure that in a risk to reward equation easily. All right, question about Schwab. It was downgraded by Morgan Stanley, expecting revenue to drop 30% in each of the next 2 quarters, citing the funds outflow, which is weird. I mean, they are just not at risk. A lot of their stuff is retirement money, and that is not liquid money or mobile. A bit skeptical of that downgrade since E-Trade owned by Morgan Stanley would benefit. So we talked about Schwab when it was starting to react on the bank implosions, and I made this case then, but stock continued to decline. That's when I labeled this buy signal. We had dipped into, and we're kind of, if you picture the water's surface and holding an inflated balloon beneath the water's surface and it pops back up, that's accumulation. It popped back up, but it hasn't extended through my buy signal. So I don't, in that environment, I mean, even if we knew with 100% certainty that Schwab is not at risk of losing funds, that maybe its revenue contracts anyway, but 30% probably not, and probably not because of lost funds. Even then, if the sector's multiples are contracting, there's nothing we can do about that. So right now, this pattern hasn't changed. This is still my buy signal. I'm not going to catch a falling knife in that scenario, but I want to be quick to recognize when the knife stops falling. So we can look at a preliminary buy signal instead of waiting for 66, 68. 58, 15, 58. Yeah, 58 starts looking compelling. But it's got a V bottom here since it's not, its initial rejection hasn't attracted reinforcements. We can't dismiss the potential for actually retesting that V, that spike. You know, it's all but assured at this point of actually seeing 47. It's almost requiring it at this point that we see 47. So that's the next spot where I would be able to consider lowering the buy signal. All right. On Saturdays, by the way, really just repeating, we do the bigger picture. Do the bigger picture on Saturdays. On Saturdays, we also review individual stocks by request. So a Saturday review, if you're a subscriber or on trial, you'll get an email in the morning saying, we're meeting around the corner back here in this alleyway for our weekly Saturday review. Or you can come in through the stream if you want. Anyway, I go over the bigger picture, etc., and open the floor to individual stock chart requests on demand. All right, any questions, please ask. I'll be right back. All right. I would like to see the high retested. With RSIs having left overbought territory, the highs retest isn't assured of taking RSIs back into overbought territory. Not both of them simultaneously. And I wouldn't mind getting some input as to how strong the trend remains. On Fridays, it tends to persist through the noon hour. If this were any other day of the week, I'd be looking as aggressively as possible at a sell. I do still want to identify how much room there is for selling pressure without it even threatening to reverse the trend down. Not that I want to take a sell signal at 4106.25. Again, I really at this point just wanted to identify if this suddenly falls out of bed, we'll be looking at buying it down to here. And there it is. There's a fresh high. And notice what happened to RSIs. 3-minute and 1-minute RSIs both diverged negatively. It's not yet high enough, higher high, that I can calculate a new pullback limit. Still in here at 41.1150. But it's now a new pullback limit, as if it's a new calculation. That is, it's now able to be tested again for the first time because its first test already produced a fresh high. Something else to point out. The 3-minute high recovered to a fresh high. The 3-minute test of the pullback limit. The usual attention span of weak-handed counter-trend sponsorship. It just wasn't ever attractive enough to consider a long. And then the last thing I want to point out, second to last thing I'll say, simultaneously diverging, negatively diverging RSIs. That's not a sell signal. Now, very often you'll see that it did launch a reaction down. But at first, it's a call for reinforcements. This is buyers calling for reinforcements. When price returns to a fresh high, but RSI does not return to overbought, that's buyers calling for reinforcements to keep dragging price higher so that RSI returns to overbought territory and entrenches itself again, just as this dip did. We're entering the noon hour at fresh highs on a negative divergence. Despite a negative divergence, entering the noon hour at fresh highs. Sometimes the strongest signal is not strength. Sometimes the strongest signal is more than that. Strength in spite of weakness. Or in spite of vulnerability. And there's that vulnerability. If this pullback limit wanted to start being tested, it would leave no unfinished business above. Still prefer to see 41.18, 41.21 area tested at least, but technically, I mean, that's a calculation. That is a prior high as well, but it doesn't have to be tested. We could start slow playing it, pessimism or restrained optimism, bullish from a contrarian perspective, but it has to behave negatively in either case before we can consider it to be bullish. All right, so, and there's fresh highs. So I'm just not going to be getting aggressive on a sell signal anytime soon. I need to see some weakness. This kind of pattern, there's probably going to be some shock to the system, some pretty good attempt to react down. This kind of a pattern, this kind of duration, maybe it'll be productive to a degree, but it'll probably be temporary. Totally recovered and reversed to fresh session highs. That's the premise. That's usually what we're going to see.
All right, new bias parameters are on the blog. $41.18 is the afternoon's bias up signal. Its resistance, its recovery through 120 would put into play the bias up target. 41.29, a test of uptrending channel. No requirement, even if we knew with 100% certainty that's coming. It doesn't have to come today. New pullback limit is 41.14. All right, any questions, please ask. Meanwhile, actually, I'm going to leave the stream running a little bit. Also, I'll go ahead and all right. I had that note and it just disappeared. So basically, go to viditrade, start a free trial. Normal free trial, 1 week free to everything. Do the Vidi room so you get this room that you've been in all morning. If you let it renew at the end of that week. Normally, you'll just automatically get the Vidi room for free. That's for the first 4-week term. It's $200 savings. Normally, it's a $200 upcharge. And then renew again, and you start paying the normal rate. But if you sign up today for the free trial, not even buy, but if you're in today, then we'll continue to refund the next 5 months as well, or the next 4 months as well. So that's 5 total terms, $200 each savings. That's $1,000 savings. As, of course, my appreciation for you being here and for spending money with me. Anyway, call it what it is. But I hope you enjoyed it. I hope you learned something. I don't mind seeing more questions. Anything that gives you, if it's just to get my perspective on the market, then that's as much an insight as to what I offer. I give my answer in terms of how I'm looking at the market. But if you have specific questions about the setups, definitely bring those questions up as well. The setups are unique. They are proprietary. I've discovered them all. They have great insights into how markets function and why. And they just help you know the behavior, what's really going on. Why am I not concerned that we're just sitting here through 10:15, 10:30, and why am I ready for things to start moving? And by the way, they did. That's great. If they hadn't, we were totally anticipating that once sellers were absorbed through the timing window, 10:15, 10:30, buyers could get on with it. They were getting on with it. They were absorbing them this whole time. But had 10:30 come and gone and we still weren't extending higher, we would have raised the cautionary flag. We'd actually be looking for a pullback, reversal down. We probably would have seen a reversal down. When you know how these things work, what's the market doing and why? When we didn't really see isolation tests today, we just saw traction being gained. Yeah, we talk about distribution and accumulation. Here's an example of accumulation. This is last Friday morning. Last Friday morning, I call this an opening thrust. And we're looking at price action, what it has done during specific windows and how that specific window ended, and then the next window, how that behaved and ended compared to that. And we can identify when sellers, for instance, in this case the thrust was sponsored by sellers. And it wasn't arbitrary. They probed a prior low. They kept pushing and bouncing. Why? Because buyers were overwhelming them. That's accumulation. Or if it were happening into resistance, it would be distribution. So it's a price level. It's a relevant price, but it doesn't mean anything unless you know the time frame, unless you know when does it matter where price is. And we knew that morning we had sellers were weak-handed. It's just a matter of time when that accumulation would be fulfilled. On Fridays, that happens to be doubly bullish because we have the timing. We expect the rest of the session to fulfill it. And the rest of the session did. And if you just take your monitor and turn it upside down right now, you can see an example of distribution just by looking at this very same pattern. Testing resistance. Don't actually turn your monitor upside down. Testing resistance, but holding those tests through relevant timing windows. So that's distribution. The opposite, or the inverse actually, of accumulation. So, viditrade.com. If you have any difficulty, come back in here or drop me an email that you're having difficulty joining, but start a free trial and just get it normally with a free week. And then if you subscribe, you'll get the free term, the first free term to the video room. But if you do and keep renewing, you'll get a total of 5 that's not available to other subscribers. That's $1,000 savings. But that's it for me. Thanks everyone for being here. Make sure you subscribe to this channel if you're not subscribing to the viditrade service, where you get the video room every day, all day, with a whole lot more of information and learning. At least subscribe to the YouTube channel so you'll know when I open the free stream again. I can tell you now it's not going to be for a couple weeks. And then it's going to be a day or 2 at most. Have a great weekend, everyone. Take care. So this was, it's afternoon and the room should be closed, but I just wanted to leave this open. I just pointed out to subscribers more specifics about what I'm looking for here. I'll go ahead and show that here in the YouTube stream as well. Just basically that this is the area I was looking for. We're there. Doesn't mean we can't blow through it. If this weren't a Friday, I'd absolutely be looking for a reaction down because of how pivotal this area has been previously, and this may react down anyway. It may react down after blowing through resistance for a while to 41.28, 29. But we're, as far as what was likely, we're there. That's done. So really great morning. I already see subscribers taking advantage of the offer, so please do the same. And if not, I will see you the next time we do a YouTube free stream. We just did 2 days. Probably going to be another couple weeks before the next one. Take care, everyone.